So first of all, tell us what you're reading into this delay here. What do you think it implies about what we're going to end up getting from OPEC Plus?
Yeah, so I think, as you guys have mentioned, the delay did take the market by surprise. And what I'm reading into it is effectively we have some pushback coming from some of the African producers who have had their baselines for 2024 cut in the June meeting. So they've already had to kind of say, okay, your baseline's going lower because you haven't been producing at your quota, and we're going to reduce that. And we're going to increase the quota for the UAE by 200,000 barrels a day. And I think there's a shift underlying this as you change baselines, and I think they're getting pushback. The fact that the pushback is being reported coming from some of the smaller players is a good thing, and I think that's part of the reason why we saw that rally when we were down 5% to now down 1% at the close, is because the pushback was not coming from the UAE or Russia or some of the larger players, but some of those smaller players. Now, obviously, it's not a great sign that they had to delay, but I think the market kind of overreacted looking at the delay as a fact that maybe cohesion's falling apart. Obviously, that has happened. So there is a precedent for that. That's 2020 when we saw kind of the market share war between Russia and Saudi Arabia play out and prices trade negative. And again, we had that in 2014. So the market is not unfounded in worrying about this, but I think maybe jumping the gun and reading into the delay. I think we get the deal. I think we see further cuts. It's not going to be as meaningful as maybe the market wants. It'll maybe be an additional 500 to 700,000 barrels across the entire group of OPEC plus nation. Supports the commodity, and we can see a rally from here. The uncertainty and the scar tissue in the market from if a deal falls apart is very, very tangible. We've had these massive, vacuums lower, and I just think that's kind of what we saw this morning.
So, Rebecca, just given this headline, given this backdrop, I'm looking at oil here. Rebecca, we're at 76.92. Where do you think the price heads from here in the near to intermediate term?
So good question. I think actually we can see crude rally. And I think two things. I think we will get the support from OPEC and some clarity about what 2024 looks like on their production. I think that clarity goes a long way. The increased volatility has really taken people away from the market. Secondly, everyone's, worried about demand. Demand has been very strong. We're looking at demand growth of over 2 million barrels a day for 2023. Obviously, that's going to come down in 2024. Supply in 2024 is going to grow, but I don't think it's going to outperform the way it did in 2023. So we may see the market able to be in a deficit as opposed to building. And I think that's really the key for the market. If we are seeing inventory builds, the market struggles to rally, regardless of what everyone's talking about, supply, demand. Those inventories are building. You're just going to really have trouble rallying. When we see the deficits, which I think we could see in the start of 2024, I think that gives the market some room to run. I feel like we trade 80, 85 throughout the course of 2024. It's not a huge rally, but I think that's where we're headed.
Rebecca, I can't help but think we had you on not long ago when we were closer to 90 and we were within spitting distance of 100, and it felt like consensus that we were going to get there. It certainly doesn't feel like it anymore here. And it's interesting because what you're talking about doesn't feel like big fundamental changes in the oil market between now and where we were a few months ago. Are they? I don't know. Put this all in perspective for us.
That's a really great point, Julie, because we were on this interview and you're like, we're going to 100, we're going to 100. And I was like, I think we're capped at 90, 95 here. We've got macro headwinds. This is a market that overshoots to the upside, overshoots to the downside, and that's because we're not just looking at physical players in the market. The crude is a financial asset, right? So we get a lot of different players with a lot of different objectives trading it, and it can really become more of a technical play for periods of time than just a fundamental play. We're clearly in kind of that mode right now. And I think that kind of started when we saw crude rally at the onset of the Israel-Hamas conflict and really fade that rally. We saw the technical shift under the surface, and the CTAs and short sellers started to really get on the commodity. And so we haven't had this fundamental change, but we've had a change in sentiment, and we have a change in what people are trading and how they're trading it. And right now, it's a sell the rally, be short crude, because 2024 isn't going to perform as well as 2023. I think we've overshot. I think the fundamental base case is we trade in that 80-85 range, and we'll get back there. We'll probably have another conversation about $100 crude at some point next year. We'll probably have another conversation about 65 crude at some point next year as well.
And Rebecca, while I have you, I want to ask you about gas prices as well. So AAA saying national average, Rebecca, now down to $3.28. What's your take on gas prices? Where do you think they go from here?
That's a really good question. I actually think gas prices, even if we see a rally in crude, can kind of, they'll be a little bit higher from here. I think kind of that 350, 360 range, maybe 370, 80 in the summer. But we do have some refining capacity coming on in 2024, which is going to help some of the refining bottlenecks that plagued us this year. A lot of it comes down to how many outages we have and how, if that capacity really does come online. I think that's a kind of part of a bullish narrative, though. If we can keep the kind of the gasoline prices at the pump contained, we're going to see that bigger demand number. And I think that's going to help, and that'll help drive crude demand. So I see that. I see gas prices in a moderate range next year, and I think that's a tailwind for the commodity.
Rebecca Babin, thank you so much for joining us today, Rebecca. I always love having you on. You always teach me something. Thank you.
Thank you.